Hello everyone, Rob B here with Rob D, and you are listening to the Property Podcast where we reveal our first investment of the year. Oh yes, and we give you everything, the numbers, the lot. But most importantly, we talk about the market conditions right now that have led us to make this investment. So not only can you have a nosy at what we've done, but you can decide whether it's time for you to take action as well.
Welcome to the Property Podcast. Thank you for joining us for the show where we take time out from investing a multi-million pound property fund, which you can learn about at portfolio.co.uk, and putting together hundreds of transactions a year for our clients and sharing some of what we're learning along the way for free. The podcast is one place we do that, so do make sure you're subscribed on Apple Podcasts or Spotify or wherever else. Another place we do that is in our free weekly newsletter, Property Pulse. It'll hit your inbox every Friday and make sure you're completely up to date with all the latest property news in under 5 minutes. So make sure you're signed up for that one at propertyhub.net/pulse.
Rightio, it's time for our news story of the week, and this week's news story comes from Landlord Zone, and the headline reads, "Shelter slammed over misleading claim. Landlords are cashing in on rising rents." Rob, what's going on?
Oh, Shelter. Yes, this is actually another really good example of misleading media coverage, because the data here is that in the last quarter of last year, Section 21 eviction proceedings were up 143% on what they were in the same period the previous year. So that's the actual data. Then you've got, obviously, interpretations of the data. And Shelter's interpretation is, well, this is greedy landlords. This is landlords evicting people because rents are going up, so they're chucking people out so they can bring new people in on higher rents. And some of those evictions will be that. A proportion of them definitely will. But as we've talked about endlessly on this podcast over the years, how often do people we come across kick out perfectly good tenants just because they want to ramp up the rent to the absolute maximum? Once you've looked at the costs of having an empty property and the hassle of doing it, it just doesn't happen that often, which is where this counterpoint in Landlord Zone comes from, which is saying, actually, if you want to sell a property and the buyer doesn't want to have tenants in there, then you have to serve a Section 21 notice to remove the tenants. It's the only way you can do it. And therefore, these figures mean that loads of landlords are leaving the sector because of regulation and higher mortgage rates and everything else. And again, I think some number of those evictions will be because of that. But I've got a different interpretation again, which is this whole thing is just a big nothing. Because when you actually go and look at the source data and you look at it over time, evictions are up on the end of 2021, but they're still way, way below what they were in 2017, 2018 and 2019. And that surely is because over COVID, you couldn't evict anyone. You can see on the chart that evictions dropped to literally zero and everything's still sorting itself out from there. So there's a backlog that's being worked through. So yes, everything's up on the previous year, but an alternative headline, which you're not going to see, could be evictions are running at half the rate that they are in a normal year. So the reason that we're bringing this up isn't because you need to know about this shocking data, but you do need to know about how data is manipulated and presented in the media. Because what you've got here is a piece of information and you've got one side jumping on it to say, oh, this means that all landlords are evil and blah, blah, blah. The other side jumping on it to say, oh, no, landlords are really put upon and they're all quitting. But in fact, it's kind of neither of those things. And it can be explained perfectly well by something else that isn't actually that exciting. So that's why whenever you're reading the news about property, about anything, digging below the surface and figuring out what's really going on rather than getting emotional or angry about it, which is what they want you to do, is so, so important.
Something else that is important is that you pay attention to Tuesday's podcast because, shock, we did not put out an Ask Rob and Rob. No, we failed. Well, no, we didn't. We upgraded because we gave you a mini market update. Because yes, we gave you a market update only last Thursday. But after we hit the publish button, multiple news stories came out that we just wanted to report on. So lucky old you, you have a mini market update in your feed from Tuesday. So if you've not listened to that yet, please do go and listen to it because it really will help you understand some of our decisions on this podcast and hopefully help you make better investment decisions moving forward as well. So it's only short, well worth a listen. Check out Tuesday's podcast where we give you a mini market update and bring you the breaking news that's hitting the market right now.
We have both just made our first investment of 2023. And while we don't talk about every investment that we make, we thought it was well worth filling you in on this one for two reasons. Firstly, because we're both buying on the same development, which I think is only the second time this has ever happened. And secondly, because, well, we're buying now. If you didn't listen to this podcast and you just glanced at the front pages of the papers, then you'd probably be shocked that anyone would be buying property now when surely everything's in complete meltdown. As you do listen to this podcast, you're going to know that isn't quite the case. But it is a funny time at the moment. You're going to have questions and concerns. So explaining the thought process that guided us towards our investment and why we're making it and how we're thinking about some of the risks and the downsides at the moment is probably going to be helpful. So Rob, we'll come to why now and how we feel about the market and all those important things. But we probably should start with the basics, like what are we buying?
Well, there has been speculation on the social channels about the location we're buying, but I can exclusively reveal on the Property Podcast that Rob and I are both buying in one of our main hotspots of the year, Derby. Yes, Derby. And we'll give you a quick recap on why we like Derby in a moment. But before we do, let's give you the numbers, because let's face it, everyone likes to be nosy and they like to know the numbers. So, these apartments are currently being sold for £200,000. They're 2-bedroom apartments. And they are prices that are being achieved right now. But because we've purchased this through Property Hub Invest, the company that we own that goes and sources property for individuals, we've been able to get it for £183,000. Yes, that is a £17,000 discount. A genuine one, because they are being sold for £200,000. Now, the rent on these apartments is currently around about £10.50 a month. But we feel by the time it completes, which is at the end of this year, that the way the market is going, we could comfortably get £1,100 and possibly even more. But today's rents are roughly around £10.50. So Rob, with a discount like that, it's easy to see why we've invested. But we could have invested anywhere in Derby. So why this particular development?
Well, you say we could buy anything in Derby, but actually there's not a lot to buy in Derby. And there's certainly not anything like this to buy in Derby, which is kind of the point. That's part of our strategy. And the reason that we're making this investment now, and we are both making this investment, is that it absolutely perfectly fits our strategy. Over many years, we've really honed in on what our strategy is, and our strategies have kind of aligned. They used to be more different, but now I think we're pretty much after the same thing. So because we know what our strategy is, it's very easy to see when something fits it and then jump all over it. So the investment we're talking about is perfect for us. It doesn't mean it's perfect for everyone listening, but it is perfect for us. Let's face it, property investment can be a lot of hard work, but it can be fun and it can be very profitable as well. But with our app Portfolio, our aim is to keep the fun and to give you exposure to the potential benefits of property investing without having to do any of the work. So to learn more about Portfolio, just go to portfolio.co.uk or search Portfolio on the App Store.
So let's have a look at what is our strategy and how this investment fits against it. So first of all, fundamentals. So of course, why would you not want to invest about fundamentals? And what we mean by fundamentals is your shops, your schools, your transport links, and your major employment. And Derby absolutely smashes that box because it has all those things, but the employment part of this investment is very, very strong. And it's one of the reasons why it was listed as a hotspot for us this year. Because you've got major employers like Rolls-Royce, Bombardier, and others who are all in the city. And they have great jobs. The wages they pay are fantastic, which makes Derby hit the top 10 list when it comes to an average wage. But there is a huge undersupply of stock. And those two things create an imbalance, which then helps us tick our second box, which is when we look for potential capital growth. We feel that imbalance, those high wages in the area, great fundamentals, but lack of stock and growing rental demand means that capital growth, we feel, will be on its way. It might not be a short-term thing, but over the long term, we think we'll be rewarded here. The third thing on our list, and I've touched on it slightly then, was rent. So it's got loads of rental demand for the reasons I've already mentioned. Loads of employment, lack of quality stock. There really isn't much in Derby in the way of high-end rentals, but you've got a lot of high-end tenants. Now, one of the reasons why there's that lack of supply and therefore the rental demand going up is because Derby has very strict planning laws, and most of it is related to the cathedral within the city, and they don't allow you to build higher than that cathedral, which means that when something does come to the city, it's not high-rise, and that constraint really helps the property market as well. So you've got great demand now, but also great potential for growth in the future because lots of stock is not coming to the market. And possibly most important for us, certainly from a lifestyle point of view, is we look for a hassle-free hold. Now, property always comes with problems, but we try and reduce them by going for high-quality stock, which this development is. It's the best in the city. And, of course, we'll have that property managed for us, and we won't do it ourselves. So all of our boxes are ticked with this investment. So it actually makes it very easy for us to invest, because over the long term, because we've ticked these boxes, we feel like we'll be rewarded. But of course, Rob, people will be listening to this going, but what about the short-term things that are going on? There's lots of things that are scaring me right now. Why aren't we scared? Why have we still taken action and invested?
I think the first reason is that you've just said, but all these things are going on right now, but neither of us is investing for right now. So if we're going into this investment or any investment with the aim of flipping it in the next 6 months, we'd be feeling a lot more cautious and possibly wouldn't be doing it at all, because the market over the next 6 months is pretty uncertain. But we're not doing that. Our default holding period is kind of forever. So there will be reasons that come up to sell properties, but in the absence of a reason, we'll just keep on holding. So that, for me, is the most powerful reason of all. Because let's say the market over the rest of this year falls by 2%, which I had as my most negative scenario when we did our annual predictions. Well, what does that matter over the course of 10 or 20 years? It just makes no difference. When the right investment opportunity comes along, you just have to go for it. But then you've also got the fact that we've got a discount in there, which massively de-risks it. So if the market falls by 8% from here, which is somewhere in between all the main predictions that have come out, so some people are saying 5%, some people are saying 10%, let's say in the middle and it's 8%, well, we got an 8% discount. So the worst that happens is it comes back to being worth what we paid for it. But we both believe that actually over the next year it's going to be better than that. So I would say for the type of investment we're making and the duration we're making it for, the only reason not to buy an investment that falls absolutely perfectly squarely into the middle of your strategy is if you believe that the market's about to absolutely drop off a cliff. And for reasons that we've gone over multiple times and backed up even more strongly by the episode that we put out on Tuesday, Rob, we just don't believe that's going to happen. So for me, concerns about prices just are not a factor when it comes to me investing right now. But something that could be, and something that I think a lot of people will be thinking about at the moment, and a potential reason why they might think that investing just doesn't work at the moment, is mortgage rates. So how are you thinking about mortgages in the context of this investment that you're making, Rob?
Now, if you've listened to our episode on Tuesday, you would have heard that mortgage rates are improving. And it's just starting right now. So it feels like the momentum to better mortgage rates has just begun. Now, this investment is actually a tiny off-plan deal. And what I mean by that is it completes towards the end of this year. So we won't put our mortgages in place today. And we feel that the mortgages will improve between now and the time that we come to get our mortgage. But we're not gamblers. So we've put in the rates for today to test it. And we're not even cherry-picked the best rates either. So we've stress-tested this against the 5.5% rate. And it cash flows handsomely. And that's no surprise because, as I said earlier, the rents are around $1,050, probably go to $1,100, and the purchase price is around $183,000. So the yield on these properties are pretty good, which means that even with mortgage rates as high as that, they still cash flow nicely. But we believe that's our worst case scenario, and actually will do better by the time it completes. So buying right now in the market with mortgages the way they are may feel uncomfortable, and it's completely understandable. But as we've said for weeks and weeks now, and not just on Tuesday, we feel they will get better, that the competition will increase, and mortgages will become attractive again. Are we going back to where we were 2 years ago, where mortgages were next to nothing? No. But are we going to a place where buy-to-let mortgages may hit sub 4%? At some point, yes. Might not be this year, but it'll be in the next few years. So that also might dictate the type of mortgage we go for, that we don't fix in for too long, because we think we might be able to do better in the not-too-distant future. We'll see the trend of the coming months before we have to make that decision. But mortgages and this general poor sentiment in the market, the negative press, are putting people off right now. But the reason we give you the info that we do on the podcast is so you can get ahead of the curve and make better decisions. And on Tuesday, we helped you get ahead of the curve by giving you information that people just aren't really talking about yet, but sentiment catches up. So, Rob, I think we've addressed why we're not worried about the two main things other people may be, which is falling prices and mortgage rates. But it moves us nicely into why not only do we think it's an acceptable time to buy, which I think you've highlighted quite nicely with the discount we've talked about and that the fact we focus on the long term, but why it may potentially be a great time to buy. And market sentiment being behind what's actually playing out right now was a big driver for us.
Definitely. I feel so much better about making this investment now than I would have been a year ago, which at first sounds insane because the market was absolutely flying a year ago. But that's kind of the point. When the market's flying, it's really hard to do good deals. But now there are these opportunities out there and there is less competition temporarily because people are still thinking as if it's September last year. Even though we're now 5 months down the line and loads of stuff has changed, it takes a long time for sentiment to catch up with what's actually happening. So you might remember getting on for 2 years ago, we put out an episode called something like, "There's a property boom going on, why is no one talking about it?" And that was another case of the same thing we're seeing here. At that point, we were seeing from some of the forward-looking data and what we were observing in the market that the boom was getting underway. No one else shared that view because everyone was still in the, oh no, COVID is surely going to destroy everything kind of mindset. Lo and behold, fast forward 6 months, a property boom is underway and people can't talk about anything else. This is the same situation. We're not saying that a boom is underway. Clearly it is not. But at the moment, everyone's in the mindset of the property market's about to collapse horrendously. And from everything we see, we just don't believe it is. And that creates opportunities. Of course, we could be wrong. We don't know for sure what's going to happen in the future. We've got a pretty decent track record, but that doesn't mean that we're definitely right now. It doesn't mean we're always going to be right in the future. But because of the type of investment we're making and the duration that we're making it for, it means that if we are wrong, then that's fine. We can live with it. We've got an asset that's still producing great rent and putting money in our pockets each month. But if we're right, then the situation is a lot better than that.
So we wanted to use this episode to inspire you. This isn't an advert for Property Hub Invest. This deal, if you want it, if you're not a Property Hub Invest client, is too late. It's gone. By the time you've got in touch, spoken to us, everything else, it's disappeared. So it's not the purpose to get you to come and buy one of these units. The absolute purpose of this podcast is just to show you that we've woken up. We sense that most people are getting it wrong right now in terms of sentiment, at least. And we feel there are great deals to be done because people are sleepwalking at the moment. And it doesn't mean great deals to be done only with Property Invest and they're the only people on the planet who can do great deals. No, you can do great deals because this market allows you. But one of the core reasons we wanted to talk about it today is we don't think this window is going to last that long. So does that mean you can't do a great deal in 6, 9, 12 months' time? No, but it's just easier now. And why would you not want to work in a market that's a bit easier to operate in? So go forth, get yourself a deal. Make progress on your goals. As you heard on Tuesday, it's nowhere near as bad as people are making out. The green shoots are there for us all to see. It's just that some people are choosing not to see it right now. But don't wait until the moment's passed, until the media tells you to invest again, because that's when it's going to be a booming market and it's near on impossible to do a good deal at that point. So be brave. Take action. You don't have to invest in the next 10 minutes, but at least start pushing forward again. Wake up, get them Rightmove alerts on, go to viewings, speak to your sourcing agent. However you make progress, just make progress. Don't wait for the media to tell you to do it, because by then, it'll be too late.
Time before we wrap up the show for Hub Extra, the part of the show where we give you something more, some kind of resource, tool, tip, something we've been enjoying. And Rob, you are flying with your reading. You've got yet another book recommendation for us.
Yeah, and a big claim, because I know it's only February, but I think this book might be one of my books of the year. So when we do a recap at the end of the year, I think this might make the list. This is a brilliant book. I don't even know how I found it. Audible recommended it to me. And the reviews were so strong that I thought, okay, I'll go with the crowd on this one. I'll go with the crowd and give it a go. And it's not necessarily the type of book I normally would pick up. The book is called Breathe, A Life in Flow. And it's a memoir by the jiu-jitsu legend Rickson Gracie. Now, I'm not a big jiu-jitsu fan, nor do I watch MMA on a regular basis. I'm aware of it. You know, if there's something massive on, I might take interest, but I'm not a fan. So don't be put off if you're not a fighting fan. This story is bonkers. I think it should be made into a film, his life story, because it is absolutely nuts. The man is off the scale in terms of his dedication, the way his mindset works. His family history is absolutely fascinating. It's only 6.5 hours long on Audible, so the physical version of the book isn't going to be too intimidating either. There doesn't seem to be a wasted page. It's all interesting. It's a riveting read. I highly recommend it. It had such an impact on me that I actually Googled jiu-jitsu classes locally to me. I stopped after about 5 minutes, but the fact it even got me to that point was incredible. So it's a great book. I don't care if you're into fighting or not, jiu-jitsu or not. If you just like to hear about the lives of interesting people, because I do, then you will love this book. So that's Breathe, A Life in Flow by Rickson Gracie.
That's super cool. That's one of my favourite types of book, actually. It's one where it's about an interesting person in a field that I'm actually not interested in, because then it's a way about learning about this whole new world and something I wasn't previously aware of as well. So that is now on my ever-growing wish list. So we're done for this week. Thank you for joining us. You can find us on all the socials at Property Hub UK if you want to share what you think and what you're up to. And as you've heard in this episode, so important to have the latest information about what's going on in the market, because that's how you can profit rather than being months behind the times like everyone else. And a really easy way to do that is to not just listen to this podcast, but also sign up for our free weekly newsletter, Property Pulse. You can sign up for that at propertyhub.net/pulse. We will see you again next Thursday. Until then, have a great week. Bye-bye.
Bye-bye.